Hi, everybody, it's FIBO Group, and you are watching to the Market Watch review. The bearish trend lower in equities has not been stopped by the start of the new week. Many Asia-Pacific centers, including South Korea, Taiwan, Japan, and Taiwan, were closed. China's markets reopened, and the Hang Seng fell nearly 3%, and the CSI 300 dropped 2.2%. Europe's Stoxx 600 fell 1.2% last week and is now down almost 0.5% today. The S&P 500 could open at the pre-weekend low, while the NASDAQ may gap lower. The new week begins in strong form for the greenback. To pace the broad movement, the Australian dollar is slightly lower than 1%. For the fourth consecutive session, gold is heavier. The next target could be $1,672. December WTI's gains last week were initially increased to $92.25, which is its highest level since August. However, the open has seen it sell and test the 90.40 zone. Asian Pacific market. Australia has reported its reserves. From $80.6 billion, its reserves grew to $83.6 billion. The Australian dollar fell to a 2-year and a half-year low of $0 and 6,290 cents. Japan was on holiday today, and the dollar rose to the highest level since last month's intervention. It was slightly lower than JPY 145.65. On September 22, the high was 145.90. Today's dollar trades above 145.00 for the first time since 1998. Market of Europe. Lower Saxony was the only place where the SPD received a plurality vote. The SPD has been in control of the state for 5 consecutive years, but it could be forced to do so again with the CDU. The Greens, which are part of the National Alliance, appear to have received enough votes to allow for SPD Green coalition. The federal coalition may be affected by the election results. For the fourth consecutive session, the euro will be sold. It was close to $0 and 9,680 cents. It appears that there is little stopping the retest. The Bank of England will end its emergency gilt buying program. It will buy 10 billion more bonds. Sterling is experiencing a 3-day slide in tow, and it is not able to sustain its current uptick. It dropped to $1 and 1,025 cents in the early Europe, where it was at its lowest level for 7 days. Market of America. The unemployment rate fell to 3.5%, a cyclical low. The average hourly wage rose 0.3% to 5% year-over-year. The base effect suggests that the year-over-year pace could slow to 4.5% by year's end. The market reacted to the hawkish remarks by Macklem, Bank of Canada governor, and increased the risk that it would not dial back on October, unlike the Reserve Bank of Australia. However, the risk-off attitude reflected in slumping stocks is still strong. The US dollar trades within the pre-weekend range. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.